Tell me how you feel about Bitcoin, and I can probably tell you what decade you were born in. The dismissal, the skepticism, the curiosity, the conviction, none of it is random. Every generation alive today met Bitcoin at a different point in their financial life. And whatever was happening to your money when you first heard about it shaped everything you believe about it now. Your reaction to Bitcoin isn't really about Bitcoin. It's a reflection of what the financial system has already done to you. Every adult listening to this has been shaped by that system, whether they realize it or not. The moment you're eligible for a bank account, you're building a credit profile. By the time most people hit their 20s, they're carrying debt of some kind: a credit card, a student loan, a car payment. The credit market runs deep enough that it touches almost everyone before they've made a single deliberate financial decision. We don't arrive at Bitcoin as blank slates. We arrive carrying every belief the financial system spent years installing in us. Before we go generation by generation, there's one thing you need to understand: the Great Trust Collapse. For the last 50 years, faith in the financial system has been quietly eroding. Inflation that was supposed to be temporary turned permanent. Bailouts that were supposed to be one time became a pattern. The dollar that was supposed to hold its value has lost over 96% of its purchasing power since the gold standard ended. Each crisis, the message stayed the same: the system is sound, trust us. And every generation responded based on how much trust was left when Bitcoin showed up. The tragedy is that most people now judge other generations' reactions to Bitcoin without ever asking the real question: what was their relationship with money already when this new asset landed in their world? So let's look. Start with the boomers. Boomers walked into the post-war gold standard world and watched it die in 1971, when Nixon took the dollar off gold. Inflation ate the 70s. Pensions got replaced by 401ks and were sold as an upgrade. House values quintupled, and that appreciation got labeled wealth, when most of it was inflation in disguise. For boomers, the system mostly still worked, but it required real estate to work. The house became the savings account. The house became the retirement plan. The house became the identity. So when Bitcoin shows up and says, actually, there's a better store of value, and it's not your house, that's not just an investment thesis. That's an existential threat to the entire framework a boomer's financial life is built on. So most dismiss it, call it a tulip mania, compare it to Beanie Babies, wait for it to collapse, and every time it doesn't, the waiting just continues. From the outside, that looks like stubbornness. From the inside, it's something different. It's a generation that put everything into the system that promised stability, and Bitcoin is telling them that system is the problem. You can't expect someone to embrace the thing that exposes the foundation they're standing on. Now things get more interesting. Gen X. Gen X watched the dot-com bubble explode, watched their parents get laid off after 25 years of loyalty, watched 2008 destroy home equity, right when life was finally starting to feel stable. At some point, your nervous system stops believing the experts and starts trusting yourself. So when Bitcoin showed up, quietly in 2009, right after the financial crisis exposed the entire banking system, Gen X had a unique reaction. Not full belief, but not full dismissal either, just watching. Old enough to be skeptical of hype, but young enough to understand a computer. Burned by Wall Street, but burned just as badly by tech bubbles. So most took a small position, 1, 3, maybe 5%, and handled it the way they handle everything: hedge against the system. Don't trust the new thing too hard either. Gen X is the most balanced Bitcoin generation, not because of intelligence, but because of experience. After enough disappointments, you learn that no investment, including this one, deserves your full belief. Not maximalists, not deniers. Just the generation that quietly holds Bitcoin and never talks about it at dinner parties. Then come millennials. The generation handed the worst financial script of all: go to college, take the loans, buy the house, trust the career. By the time millennials had any real money, the 2008 crisis had already taught them that the institutions were lying. Wages stagnated, rent crushed. The dream of ownership got repriced into a punchline. Then the government printed trillions of dollars during the pandemic, and the value of every dollar saved quietly evaporated in real time. Bitcoin, for millennials, wasn't a speculative bet. It was a logical conclusion. If the system is rigged, if the dollar is being debased, if real estate is unreachable, if traditional finance won't let you in, then a fixed supply digital asset that nobody can print, censor, or seize starts to look less like a gamble and more like the only honest savings vehicle left. Millennials adopted Bitcoin not because of returns. They adopted it because every alternative collapsed. When older generations say millennials are reckless with crypto, they're missing the psychology entirely. If every long-term promise has failed you, house, career, dollar, retirement, putting your money into something the government can't dilute isn't reckless. It's the most rational response to watching the system break in real time. And then Gen Z, born into all of it, growing up in the wreckage, watching parents stress about 2008, a pandemic during high school, inflation eating the first paycheck, financial education that didn't come from a bank. It came from TikTok, Discord, and YouTube. And on those platforms, Bitcoin isn't a controversial asset. It's just an asset. It exists. It's part of the landscape. The way previous generations grew up with the idea of a stock market, Gen Z grew up with the idea of crypto. So their relationship with Bitcoin is fundamentally different from every generation before. No convincing required. The debate isn't whether Bitcoin matters. The debate is how much to hold, when to buy, and whether to keep it on an exchange or in self-custody. But here's the dark side. Because Bitcoin sits in the same digital landscape as meme coins, NFTs, and zero-commission gambling apps with confetti animations, Gen Z often doesn't separate them. To older generations, Bitcoin gets grouped in with the whole crypto casino. To Gen Z, Bitcoin sometimes gets diluted by association with thousands of scammy tokens that aren't anything like it. The highest natural literacy and the highest noise pollution at the same time. Not their fault, just the environment they were handed. Zoom out, and the same psychological pattern shows up across every generation. Boomers reject Bitcoin because their identity is tied to the assets it threatens. Gen X holds a little because no system gets full trust. Millennials lean in because every other system has failed them. Gen Z is already past the debate. Every reaction makes sense. The world just kept changing what sense meant. Your opinion on Bitcoin isn't random. It's shaped by what you've watched succeed, what you've watched fail, and what your nervous system learned to trust. Every generation looks at Bitcoin and sees something different. Boomers see a threat. Gen X sees a hedge. Millennials see an exit. Gen Z sees the default. But Bitcoin hasn't changed. The viewer has. The same asset, the same code, the same fixed supply. And 4 completely different verdicts. That's not Bitcoin being uncertain. That's people being shaped by what they lived through.